Aotearoa, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. We're ending the year with a mostly strong international economy, but worries are growing about the prospects for 2025. If both China and the US turn down together, then all bets are off. But right now, it's going to be a relatively quiet week ahead, as you would expect with major holidays in some of the largest financial markets. But we will get data from Singapore, their CPI, from Thailand about exports, Taiwan about retail sales and industrial production, from China about industrial products and their latest MLF interest rate, from Canada, their PPI, and from the US, durable goods orders, new home sales, jobless claims and some regional factory surveys. So enough to keep an eye on while we relax. Nothing locally, of course, except the November data dump from the RBNZ tomorrow. In the US, there was a last-minute avoidance of their shutdown as conservative Republicans were not prepared to give the incoming president the blank check of a suspension of their debt limit. Trump lost that one, and by quite a wide margin, so it may not be plain sailing for the Trump-Musk presidency. Meanwhile, the widely watched US PCE measure of inflation came in at 2.4% in November, up a tick and to its highest since July. Core PCE inflation stayed even higher at 2.8%. But these results were actually a tick less than was expected. The 2.8 inflation level is also what the University of Michigan survey reported. American personal disposable income rose 2.6% from a year ago, a slight undershoot, but the personal spending remained strong, up 2.9% and similar to the gains over the past 6 months. Personal saving as a percent of disposable income rose marginally to 4.4% from the prior month, and ending the longish decline from the start of the year when it ran at 5.5% of personal disposable income. The 4.4% level is where it ran for most of 2023. Across the Pacific, Taiwanese export orders stayed elevated, up 3.3% from the same month a year ago, which itself was elevated. And China reviewed its loan prime rates on Friday and kept them unchanged at record lows. Its MLF rate will be announced this coming week. In China, there have been recent reports of officials calling in bond traders to lecture them about responsible trading and the consequences for not. Chinese bond yields had fallen to record low, and as readers here who have tracked our monitoring of the Chinese 10-year yield will know. But today, the fear of losing money is winning out over the fear of officialdom's wrath. China's one-year bond yield broke below levels last seen in the GFC to the lowest since 2003, driven by bets on aggressive policy easing and demand for safe haven assets. The yield on the one-year government debt plunged 17 basis points to just on 0.85%. The 10-year is down to 1.69%. While it might be too harsh to call it panic mode, there is certainly a hard edge here in fear of where the Chinese economy is headed. And Japan reported November CPI inflation, and that rose again, now to 2.9%, with the widely watched core inflation rate at 2.8%. Japan also said its population fell to just under 124 million, a fall of 325,000 in a year and 3.1 million in a decade. Now, 29.3% of that population is 65 years or older, with only 11.1% under 15 years. In China, which is also thought to be having a similar demographic problem, those spread details are 14.3% over 65 and 16.8% under 15 years. Following the recent 200 basis points out-of-cycle interest rate rise in Russia and the central bank guidance then, they were expected to raise their policy rate by another 200 basis points over the weekend to 23%. But they didn't. Apparently, the Kremlin isn't keen on the independence of the Russian central bank governor anymore. And perhaps we should note that nickel prices have hit a 4-year low on the combination of low demand and surging Indonesian supply. Russia is no longer a force in nickel supply. Prices for rough-cut diamonds are also plunging, this time on low demand out of China and their acceptance of artificial alternatives. The US Treasury 10-year yield is now just on 4.53% and up 2 basis points from this time Saturday, but that is a net 16 basis point rise for the week. And the price of gold will start today at $2,622 an ounce and down $3 from Saturday. But that's down $36 from this time last week. And oil prices are unchanged at just on $69.50 a barrel in the US, while the international Brent price still just under $73 a barrel. And the Kiwi dollar starts today at just on 56.7 US cents and unchanged from Saturday, but that is down almost a cent from a week ago. Against the Aussie, we're holding at 90.4 Australian cents. Against the euro, we're still at 54.3 euro cents. That all means our trade-weighted index starts today at just on 67.1 to be unchanged from Saturday at this time, but down 50 basis points from a week ago. And the Bitcoin price starts today at $95,659 and down another 1.5% from Saturday. A week ago, it was at $101,536, so down 5.8% from then. Volatility over the past 24 hours has been modest, however, at plus or minus 1.5%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.